Hi, hello, and welcome to the Lion Show. It's your host, your favorite business coach, Robert Lyon. Today, we got the great pleasure of talking to Dan Rodgers. All right, he's a former loan broker. He's an SBA expert. He's got a PhD in sales. I'm just super excited to have him on the show today. So, Dan, if you could just kind of introduce yourself and kind of tell the people a little bit about you and what you got going on.
Okay, cool. So as I just need to make one bit of clarification. When I say I have a PhD in sales, that's a street earned PhD in
Yeah.
sales. Like I'm not going to
Sorry.
go false valoring my actual lack of a doctorate in sales. So I'm one of those people who has never done anything. And I say this all the time, which is I've never engineered or dentisted or lawyered or anything like that. Like I've never been in construction. So I've never done anything other than talk for a living. So which is I've been in sales. A career in sales found me into the loan brokering world, found me working directly for the SBA during the pandemic. I think I mentioned to you on our first chat that I am on record as the world's worst federal government employee. And I got fired from the SBA because I wanted to help everybody and fix the SBA.
So you
Neither
actually
one of
worked
those.
with the government though on the
Oh
SBA
yeah,
side?
yeah. I
Oh,
was
cool.
on a fraud prevention team processing EIDL loans and realizing that when $60 billion goes out the door to third world countries, nobody cares. That you're like, that's my money that they don't care about, and they don't like you bringing that up.
Right,
So
pointing it out.
and then yeah, so I went from SBA, and then I found my way into SBA lending, and I think I just clicked over 3.5 years as an SBA lender, and but my root is or my roots are in the frontline conversation where business owner needs money and they don't know where to go. And there's going to be some sort of intermediary, a business consultant or loan broker, whatever it is, and they're going to connect that business owner with like what are the types of capital that's out there. So I still live with that idea of how do I connect them with the capital that is available, not just what my bank provides. So I'm always seeing the trees and the forest at the same time.
Yeah.
And I love my vision and how I kind of operate is I want to help the US economy, and I do it one business at a time. And I really think I do a good job because there's a lot of people like, you probably experience this on a daily basis. There's a
Mhm.
lot of business owners who don't know how to go get business money, and
Right.
they get stuck or they go get bad things or the wrong things or ask for the wrong thing at the wrong time. So yeah, I live and breathe inside that money for business space.
And then was the SBA government job, was that your first gig in finance or what was your first finance kind of
So my
position?
first gig in finance, I was a private money lender
Oh, cool. For
a
real estate?
long time ago for real estate. I bought houses off of, the courthouse steps. I knocked on doors and bought houses
Yeah.
that were facing foreclosure. And I was actually a home loan provider for a long time prior to the big depression, recession, whatever. So I was calling 150, 200 people a day and asking if they wanted to refinance and had a little bit of success with that as well. So I've been in finance, but then, in
SBA is a whole
probably,
nother thing. But I mean, they're
yeah,
kind of like, I don't know. I feel like real estate, it's just all big money stuff, right? It's big
yeah,
business, buying real estate, buying things that people need the extra capital to achieve and to get,
exactly.
right?
Yeah.
Help people achieve their dreams. Well, that's cool. What market were you in for the real estate stuff, or were you everywhere?
I was not everywhere. I was living in California at the time, living in the Silicon Valley. So generally speaking, my loans were within 1 hour of San Mateo, California. And you kind of limited by licensure when you're a home loan person, especially a private loan person, because I want to be able to go see the property and not have to make, a flight to go do it. So
Yeah.
yeah, and here's something that is a core belief of mine. Nobody wants a loan.
I want a loan.
As
No, I'm just kidding.
Yeah, like you want what a
More
loan
loans.
gives
Yeah.
you.
Right, right, right.
You want the future version of like what happens when you get it.
Yeah.
But nobody wants an SBA loan. Nobody wants a home loan. Nobody wants a private money loan.
Yeah.
Like it's a tool. It's just a
Money is
tomato or something like
just,
that.
yeah, cash is trash, but like money is just the bridge to get you to the dream, right? So whenever you're talking
Exactly.
to sales prospects or anybody, it's like, what is it that they want behind the money, right? Is it the status? Is it the winning? Is it their business expanding? Is it peace? Is it what's it going to really bring to them on a deeper level, right? That's what I
Yeah.
always try and teach people.
Yeah.
Um, so I guess I want to get into the SBA.
Okay.
I'm fairly ignorant into the SBA, so I understand that the government kind of backs the loan, right? Like up to 70% or something like that. But what other really big benefits do SBA loans have? And what kind of like What's the real appeal?
All right. So any graph that you see about the displacement of the bell-shaped curve in business owners in the United States, it's like 85% small business owners, way less than 500 employees. And so this demographic of business, which really supports the U.S. economy, um, there is a gap in between what a conventional bank lender will do, which is about 60, 65, 70% of the risk. The bank will usually take on that 60%, 65% risk with a conventional loan. And anytime somebody does not have the ability to bring into the loan file cash injection to meet that 65% LTV, they will be deemed not eligible or not a good bank loan fit. So you have two options or three options. You can either not get the loan, you can bring in an outside investor who brings in that capital, who brings in the gap between 100% and 65%, or 90% and 60%, whatever it happens to be, or 85% and 65%. You can either bring in an outside investor or you can bring in the SBA. You can bring in the federal government. So the federal government is acting as a quasi partner and investor in a loan transaction because they're telling the bank, hey, they're almost acting like a cosigner. Hey, if this person goes bad, you may have lent them 90%, but we'll go ahead and guarantee 85%. So you're only on the hook for 5%
Right.
if this thing goes bad. And if you liquidate and do all these things, you can probably recoup your 5%. So the SBA is the place where a small business owner doesn't have, like, we're talking about real money here. When $100,000 loan and it's 25 grand. Okay, yeah,
Right.
what 20? A lot of people can raise 25 grand or make 25 grand, a million, 4 million, 10
Right.
million. You're like, that's a lot of cash. And
Right.
so if the business owner can go buy a restaurant for $4.4 million and bring in 800 and do that deal where they're going to net $420,000 per year, that's a great deal for them.
Right.
But to bring in 400, 800, 1.2 million to make that deal happen may be a stretch for a lot of people where, again, the business acquisitions, the real estate purchases, like the buildings, the hotels, things like that, they may not be able to happen without that rich uncle called the US government.
Right. So government backing, government kind of co-signing, low interest rates, and a lot of money. Right. Those are like the big
Yeah,
deals.
I would say the interest rate is market rate.
Right.
Um,
Well, it's lower than investors. It's lower than if you like,
yes.
I mean, if you tried to stack loans from a bunch of other places, right? It's like
Yeah.
it's competitive basically, right?
Yeah. I say that investment money is the most expensive money you can get
Right.
because it'll cost you a percentage of something that you haven't even made yet. And so that could be a
Right.
really big number. Here's what SBA loans in terms of, like, it's not a low rate, it is the same rate range
Mm-hmm.
that millions of people are going to get. So
Right.
anybody who's coming to the table with 10 or 15% to the table, franchise purchase, equipment, business acquisition, small real estate purchase, whatever it is, everybody's going to get within this range. And so
Mm-hmm.
nobody's going to be feeling like they get taken advantage of. Nobody is going to be, getting taken advantage of. It's not like they're getting 50% interest because they're
Yeah.
opening a new startup restaurant. So it's predictable. And I think there's functionally three SBA programs. And in one of those loan programs, the 504 for real estate, it's just a shade over conventional money, and you don't have to bring in that extra 20%. So that differential
Mm-hmm.
of what you can keep that other money for, or use it for, investment for, or for the business, whatever it is, that's where the real benefit is. It's not necessarily a point or half a point shavings because it's a SBA or conventional, but it's, if you don't have to come in with the money, like, that's makes you
It's
a
a big
lot
deal.
better borrower.
Yeah. And you get more leverage. So in your career as an SBA, what's the most common SBA loans you've seen? Like, what have you done the most of, or what do you see the most of that gets approved and actually
Um,
gets through?
I have, using the example of the bell-shaped curve, I've got a lot of onesie twosies, a couple hotels, a couple restaurants, a couple assisted living facilities, a couple storage facilities where I'm not a niche player where I'm only dealing with like Taco Time franchise. Like, there are people who dedicate themselves to that type of franchise. And I'm not only working with doctors, and I've got a couple doctors' offices. My niche, like everybody has to pick a niche, and my niche happens to be difficult or complicated or very, very large commercial real estate.
Oh,
Because I know that there's not a lot of lenders providing that type of capital in that space. I love real estate. I think real estate is cool. You can touch it. I can go see it. I can brag about
mhm.
my relationship to this building being purchased and take my picture out in front of it. But there are, in terms of what the SBA does the most of, there's data on this, and I'm trying to recall it from memory. There's a ton of restaurants, hospitality, ton of that kind of stuff. There's a whole bunch of doctors or any kind of medical facility. There's a ton of that. The hotel industry is gigantic.
Right.
And so certain industries have actually come online later on down the road, like self-storage only came online, I think, in 2012. Before that, it was not an SBA eligible industry. And so the SBA kind of gives and takes what it will allow its funding for. Like you can't get a cannabis loan from the SBA, but
Right.
there's other things you can. So I'm just, yeah, I'm a generalist fan.
And everybody who needs money to start their business or get
Yes,
something big.
exactly.
And then like realistic expectations for somebody who wants to get an SBA loan. Like how long does it take? How hard is the paperwork? Does the government make you bend over backwards? That kind of stuff.
Uh, it takes longer than you'd think.
Yeah.
It is not as bad as you can imagine,
Mhm.
and it's probably worse than you're going to want.
And you have to pay your
Um,
taxes to
you
get it,
have to
right?
pay your taxes to get an SBA loan. And I tell everybody that is on the process to get an SBA loan with me, and I say, I'm the pilot, you're on a plane. Imagine the plane ride that you've been on that was the worst turbulence you've ever experienced, but you
Mhm.
still landed.
Right.
And they laugh because sometimes it can be arduous. Like the SBA is your investor. Like they want to know everything about you. And
Yeah.
when we ask a question or when an SBA lender asks a question or the underwriter asks a question, the expectation is that you provide the answer
Yeah.
or that you have a really, really good explanation as to why that happened because the government is, taking on that gap in, 65% to 80 or 70 or whatever the actual guarantee program is at the time. They're going to want to know what your spouse is doing. They're going to want to know what your previous business partner is up to. They're going to want to know about that time that you got arrested. They're going to want to know about everything. And it's not that it's a no or there are some hard outs. Like if you're actively in probation or on probation or parole, you're not going to get an SBA loan because you can violate parole or probation and go right back to jail or prison, and nobody's going to make the payments. And so that's like one of the big things. Like you can't be at risk of not being able to repay. The SBA is a cash flow lender. They want their money, and they want to make sure that the cash flow is maintained. Um,
So they're
but
going to get
it's
into the weeds, basically.
they're going to get into, yes, they're going to get in the weeds. And where people make the biggest mistake is they're not running a good business for their financials.
Mm.
And then they see all these advertisements for fast cash and overnight funding and stuff like that. And there's an old chart that my father used to have in my shed, which was you can have the job done easy, you can have it done cheap, and you can have the
Yeah.
job done right, but you pick two.
Right.
And so the SBA is not easy, and it's so you gotta do what they ask, and it's going to seem ridiculous because it's
Mhm.
actually ridiculous, but
Yeah.
it doesn't matter. It's like when you go to the amusement park ride.
Yeah.
You ever been to the amusement park ride and there's the most fun ride on there? It's 5 tickets to ride. If you want to ride the ride, you got to pay the tickets. Like
Right.
that's you got to be this tall and you got to pay the tickets, and that's what it is. There's no gray area around that.
Yeah. So do you recommend like newer business owners that want to get an SBA loan in the future? Is that the best route to go? Is to like structure your business and plan to eventually go into the SBA, or what do you think?
So this is a question that has a whole nother podcast worth of content around it. And
Yeah.
that is a very, very logical, pragmatic question that a lot of people ask. Well, should I start with an SBA loan? Well, there's people who go from corporate America to buying an HVAC franchise or a
Yeah.
restaurant franchise or like a garage door, floor sanding company. So they went directly from not having a business to having a business nearly overnight. And then there's people who are the general manager of a restaurant for 10 years and they have a chance to buy the restaurant and the building. And so they've been in the business for 10 years. And then there's people who have an idea that they want to make the next version of a sweater for cats. And they need,
Yeah.
$17 million to prototype the thing. And you're like,
Yeah. A
I
lot.
think that's a stretch, man. I think that's a stretch. So everybody's, uh, you know, progression over time, like where people are,
Mhm.
years of experience,
Right.
years in the business. Like you could have a 20-year operator of a plumbing company and he's never gotten a loan.
Mhm.
And then after 20 years, he's like, hey, I have a chance to buy my uncle's plumbing company. And how do I get a loan? You're like, well, how's your finances? Well, they pay me and I pay my bills. Like, oh man, this is gonna be a nightmare. So, and then you have somebody who's a year into the plumbing business and they want to buy 5 franchises,
Right.
and you're like, wow, you're an MIT or a print. Actually, I just had guys buy some car washes.
Mhm.
2 guys who are Princeton grads. They were amazing.
Nice.
CFOs of 2 different companies, and they want to buy all these things, and like, yeah, they're going to buy a lot more car washes because they have the horsepower intellectually and business mindedly. So they're going to go get loans and loans and loans and loans and loans. Like they're prepared for it. You ask this question, 2 minutes
Yeah.
later, it's over to you. So everybody's starting point is theirs. And there's only a certain set number of starting points. So what they do from there is to get capital. I think the first thing is go talk to a really, really good seasoned CPA and or business lending broker, or utilize the power of the small business development centers, which is part of the SBA.
Mhm.
You can go to americassbdc.org and find an SBDC in your town. Get some free consulting. Like, okay, how can I access capital? Is it going to be fast and expensive? Is it going to be investor? Is it going to be for my family and friends? Is it going to be from any of the other 15 or 16 places where we can get capital inside a business, depending on where they are
Mhm.
and depending on what they bring to the table. If somebody has a portfolio of 20 single family residences that they bought in their corporate career, and they've got $5 million worth of free and clear single family residences. The prospect of them getting a $500,000 loan to start a franchise is like 100%.
Cool.
Because what they bring to the table is the ability to repay back the loan. But if somebody who wants to do that same exact franchise has been working in a West restaurant as a waiter, and now they suddenly want to go, scrape garage floors, and they've got $11 in the bank account. Like that person has like low odds of repaying the loan. So again, what they
Yeah, it's all
bring to
about
the
risk
table,
mitigation.
yeah, exactly. So everybody is a different snowflake, but we can treat snowflakes in kind of a similar capacity.
Cool.
Yeah.
And then, I mean, I'm really kind of getting into commercial real estate more and more. Just it's kind of where the big money is. It makes me excited, right? To prospect and I don't know. There's just a whole world of commercial real estate that I never really knew about. So,
Yep.
what what have you learned just doing SBA loans for commercial real estate? How long have you kind of been doing that game? What do you see in there?
All right. So when I was a loan broker, I remember this very, very clear. My very, very first loan was a commercial real estate loan for a guy to buy his restaurant in San Francisco. So I'd never done an SBA loan. I was a broker. I had no idea, but I found out who the right lender was. And so I love the prospect of this guy buying his building, and in 20 years, he's going to have a free and clear building. He can retire and collect the rents. He can sell his restaurant and be living easy by the
Mhm.
idea of the commercial real estate. Okay. So that was my first foray into it. And that was after I'd been buying houses as a kind of a realtor, just, knocking on doors. So real estate is cool to me.
Right.
When it comes to real estate, lending as a broker of it, as a buyer of it, as a seller of it, I think we overcomplicate it in the jargon, and I
Hmm.
have it in three very, very simple buckets. So we've got dwellings.
Hmm.
A dwelling is any kind of location where you're going to have somebody who's sleeping there for more than 30 days. Airbnb, a house that you rent, a 1 to 4 unit,
Hmm.
or a 1,000 unit apartment complex. Those are all dwellings, like
Hmm.
to a degree. Like functionally, they're commercial, or they could be commercial, but they're not. But they're dwellings. And so the second bucket I have is um, rich people getting richer. Very, very simple. So this is anything that where you're going to see a triple net lease where they're going to buy the property and they're going to maintain and manage the property, whether it's a hotel, self-storage, a strip mall, a gigantic office building, whatever it is, and they're just the property manager or they hire a property manager, they own it and they collect rent and that's all they do. They don't operate their business inside the building. And
Right.
so it's a rich person who buys a huge building and now they collect more money so they get richer. Very, like it's rich people getting richer. And then third is anytime the business owner is operating the business from the address. And so this is
Business
uh,
owner.
yeah, so this is theoretically anything that's SBA eligible, but there's some that are not. And this is where you've got it could be a gentleman's club,
Mhm.
is owned by the person, they own the real estate and they operate their business there. That's not SBA eligible. So then we have a bar, which they own and they operate their bar there. So that is SBA eligible. So when the business is being done inside the building, that
Mhm.
is an owner operated, generally speaking, possible SBA eligible business. And we have some kind of really some gray area ones. A hotel, you can kind of have a general manager and a layer and be owning a bunch of hotels and you're not at the hotel, each one of the hotels every single day, but you have a team of people.
Yeah.
Self-storage, car washes, RV parks, or all these like maybe it's kind of management, it's but you're doing the marketing, you're doing the payroll, you're doing the QuickBooks. And then you have the true ones like a doctor's office. You've got a restaurant where the person who is the doctor or the restaurateur, they are owning the building, running their business out of the location, and truly eligible for an SBA loan. So when I hear people talk, well, I've got this commercial deal. Okay, is it where people sleep? Well, yeah. Okay, cool. It's not SBA eligible. Well, don't you want to hear about the deal anyway? No, because it's a dwelling. Like SBA doesn't do any dwellings,
Okay.
none. They'll do hospitality
Yeah.
in an RV park, a campground, a hotel, motel, things like that. But they're not going to be providing money for investors for rich people to get richer. That's just not the way the SBA works. They are for the business owner individually.
Nice. I mean, I want to get into some more stuff, but just for like the super basic stuff of like if someone is going to come to you and they want to get an SBA loan, they need
Mhm.
2 years in taxes, all of their pay stubs. They got to be making a profit probably, and they have to. And like if they want to buy something, they have to have it under contract, right? Or what does it have to look like? Is it more like you can get pre-approved before you
Yeah.
find the deal?
So we talked about the business continuum, like where they are. So let's say
Yeah.
the first continuum is that they're not in business now. So
Okay.
there's two ways you can get in business. You can buy a franchise, or three ways, and then you buy the franchise and then you're in business.
Yeah.
You can get a loan to start your business. So that's a non-franchise startup.
Right.
Like you were not in business and now you are in business. So you don't necessarily need 2 years of business taxes. You can get startup loans from the SBA all day long.
Yeah.
And the third one is where you buy an existing business, be it a franchise or be an existing business. They're already in operations and you buy it. So there you would take a look at all of their tax returns that are available up to including the last 3 years. So if there are existing tax returns, collect them. But if you
Right.
don't have existing tax returns, it'll be personally guaranteeing and you're going to vouch for the whole thing. Like you're going to have your income, your spouse's income, your rental income, and you're going to have to be the thing that justifies the lender moving forward and saying yes, if it's a true startup.
Right.
So moving forward in the continuum. So now we're in business and we want to buy some equipment. We want to buy a piece of real estate. We want to get a loan so we can add some staff. We want to buy some more technology. So now, yeah, if a business has been in business for a year
Mhm.
or 2 years or 5 years, all available tax returns up to include 3 years. Year to date profit and loss, year to date balance sheet, updated debt schedule, personal financial statement of anybody who owns 20% or more in the company. And these are kind of gross, roughed out rules because there is some nuance at times. So now you have like again a continuum in time where they have up to maybe they got 1, 2, or 3 years. And so as soon as we move forward from 3 years, now we just have a trailing 3 year tax returns as they move forward.
Right.
Uh, and if they at some point other continuum they got the loan to start, they got the loan to expand, They got the
Yep.
loan to buy the
Proof,
building. They got
the
the loan to
payment.
buy the second building. Everything will be based on historical cash flow financials that they
Cool.
obviously are providing with their taxes.
I love
Pay
that.
your taxes to get an SBA loan.
Yeah. So I want to kind of pivot into the broker space, but is there anything else you think people should know about SBA loans or anything that, excites you
Sure.
about it that we didn't tap on?
All right. So there is two major things and they have some overlap. If we think about a four square grid, so there's bank eligible, bank not eligible, SBA eligible, SBA not eligible. So we every file will fit onto or into one of those four quadrants. And so if a loan is in a particular industry, like if it is a pawn shop that does more than 50% of their business in pawning, lending, they're not SBA eligible black and white. It's not eligible. They may be able to get a loan from a local bank where it's bank eligible, but it is not SBA eligible per rule. And then we have situations where management companies are oftentimes not eligible by SBA, but there's a gray area, and then there's eligible, gray area, not eligible as per SBA. The bank may think it's a great loan, but the SBA may weigh in and say this is not actually a business owner, this is a rich person getting richer. So that little four square quadrant, there's almost 3,000 SBA lenders, approved SBA lenders in the country. So if one lender says, I don't like your file, that's not necessarily the SBA saying no. Conversely, if if a bank says, hey, we're not going to lend to this apartment complex as an SBA loan, that is the SBA rule being ineligible. So you can have both sides weigh in. It's either SBA rules or it's the bank rules, and sometimes they have some overlap. So whenever I talk to business owners and they say the SBA said I couldn't do this deal, I say, well, did you talk to the SBA or are you talking to a lender said it? Oh, this lender said it. Yeah. So the lender said that you have to have 700 credit score. Yeah. But you just said the SBA said you have to have 700 credit score. Yeah. You're translating the bank to mean SBA and you're wrong. The SBA doesn't actually have a hard and fast credit number, but some banks have an arbitrary not eligible if they don't have a 650, 700, 720. It may be SBA eligible, but the bank is saying no because of whatever the reasons inside the deal.
Right.
So if your lender is saying no, and you go to another lender, unless you're actually an SBA ineligible business,
Yeah.
go to another lender, go to a loan broker, go to the SBDC, because it may just be that you're interpreting bank or for SBA rule, and that's where I see a lot of people make a mistake.
I love it. I want to get some SBAs for some people now. I mean, I've had a lot of people come to me, and then I'm an expert at the credit stacking and loans. So I just basically
Yeah.
deal with the banks, right? So the
Yep.
SBA is kind of something because everybody wants money now. Nobody has patience anymore. But I want to do some bigger deals with some SBA loans and things like that. So I'll look into that. But I have a lot of brokers that follow me and watch what we do, and I got a lot of students and things like that. So what are some tips for new brokers or people that want to get into the broker business to be successful in this industry?
Okay. So I sent you a few things, and I'm just going to look at some of these notes I have in front of me.
Yeah.
So tips that again, I was in this space. I understand what it's like to know nothing and then know something and then realize how nothing you actually really know and
Right.
then think you're smart, but actually be still be really dumb. And the SBA is complex.
Right.
The biggest thing that I would say for a broker who is curious about placing SBA loans for their clients is um, know some things about the SBA, which is the biggest thing is like, what is functionally SBA eligible?
Yeah.
If you're an SBA lender and I come to you and say, hey, I've got this retail development with a bunch of apartments on top of it, and I'd like to get an SBA loan, you would immediately know that I'm a dummy
Yeah.
because that's obviously SBA ineligible because it's dwellings. And so know what is actually SBA eligible. And you can just do a simple Google search. SBA eligible industries.
Hmm.
It's like everything. As long as the business is being run by the person out of the location, simple as that.
Okay.
Um, on top of that, print out some things that are really, 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 you can go find them. And I've got one here, which is the SBA, the SBA's list on special use properties. Here again, you're an SBA lender, I'm the broker. I've got this marina and they want to do 5% down. Okay,
Hmm.
so I'm a dummy because a marina is special use. It's going to be 15 to 20% minimum as per the rules. Like that's not a bank rule, that's an SBA rule.
Hmm.
So as you're out there as a broker in the world, there's a list and there's it's A to Z plus double A. So like there's 27 things on this list in the rule book from the SBA, from the federal government, from the man, know what special use is.
Right.
And understand now when I'm talking to the lender, you say, I have this special use property, it's a museum.
Hmm.
Oh, well, maybe it's a big office building that they convert, but generally speaking, a museum is going to be a museum. A car wash is going to be a car wash. A hotel, generally speaking, is going to be a hotel. And if it only has one purpose, then it is special use, generally speaking.
Hmm.
So that's a big one. The second one is understand basic cash flow.
Yeah.
And you can do a Google search how to understand basic cash flow for a loan. So it'll be P&L, 1 year's taxes. That's all you really have to do. And on the P&L, is it a negative number or a positive number? Like start there. Negative, is it zero
Right.
or is
It's
it
good to
positive?
know.
And if it's positive, how big of a positive is? And then
Hmm.
understand what some of the add backs are, like how to understand cash flow. Like it'll take you a day
Hmm.
to do a couple videos, do a couple workbooks, maybe go to an online class and you pay $50 to get a little certification on this one. So taxes, understand like what is it of business taxes? What are you looking for? What can you find on somebody's personal taxes for their Schedule E real estate? Like how much money does this person make? How much money does the business make? Those are two big ones. The next piece that I would ask is, or I recommend is there are tiers of hotels.
Hmm.
There are tiers of restaurants from Michelin 5 star to your rolling roach coach. There are tiers of SBA lenders.
Yeah.
So I say that that Wells Fargo, who provides more SBA loans than anybody by like a factor of like 50, it's just
Oh, wow.
gigantic. And they're the all-star Yankees. Like imagine the greatest Yankees of all time on
Hmm.
one team, like that's Wells Fargo. And if somebody can get a loan, a 1 SBA loan from Wells Fargo, then they should, because it's generally speaking going to be the best
Interesting.
interest rate available. Like that's the goal. And then there's tiers. So there's Wells Fargo on the top. Then you have there's regional and super regional lenders. There's some national lenders in there where you're going to get a good deal, but it's not like they're not going to give away the deal. And then you have some regional and super regional players that are going to have like they're going to be more scratch and dent lenders. They're going to be a little bit higher in the pricing, a little bit more flexible in the underwriting. And then you have like a final tier, like I would call these D plus to C plus quality loans, projections, bad character, bad credit, cash flow is really not there on the building, but maybe they've got outside income. You're like, we're probably not going to see this loan, but the building or the business isn't making money enough to support it, but they make a lot of money elsewhere. I think we're just going to roll it.
Right.
And so these D and C minus lenders, that's going to be your what's called a non-bank SBA lender, and they're very there's a few dozen of them.
Hmm.
Harvest Small Business Finance, New Day Finance, Celtic, New Tech, where you're going to get the highest rate that the SBA will allow, but you get the deal. So you should be able to ascertain and triage where your deal fits on the tiers. Like
Yeah.
how hot is your deal? Like is it prom queen or is it not prom queen?
Right.
Is it male model or is it middle linebacker who took a couple like shots to the face? Like where is this thing in terms of
Yeah.
the deal? And you have to be able to understand. Like ask the questions like why is it bad? It's pretty simple. It's credit,
Hmm.
cash flow, quality of the asset, location of the asset, and what's going to happen after they get the loan. And ultimately, there's one more there, which is what have they done prior? And here's a perfect example of a bad deal. Business, it's an automotive business. They've been operating the same place for 20 years. They bought the building for 500 grand, and they're asking you for a refinance for 3.5 million. And you're like, so your business isn't that profitable, but you've just been refinancing the hell out of your business over the last 20 years and pulling equity out of the business as you go along. Where the profit, it's not profitable, it's not that great of a business, it's not growing, it's not expanding, but it's over time, it's able to pay the payments, but it's not like a really, really healthily operating business without this piggyback of the real estate underlying. So again, know the special use, know what's eligible, know the tiers of lenders, and find out who those tiers of lenders are in your area and nationally. Be able to ascertain if it's a bad deal or not. And there's kind of a, just generally for real estate, I have like this is actually a little chart you guys can see there.
Yeah, I'll put that in the slides.
So it is LTV, loan to value ratio, and credit score. And so when you get below 65% LTV on a commercial real estate property, in your back of your mind, if it's great credit, you can go conventional. And if it's terrible credit, you can go private money. So understand that there's conventional, private money, and then in the middle ground, there's kind of this overlay of SBA or state bank guarantees. And so the LTV of the property is really important when we're talking about commercial real estate. For doctors and veterinarians with great credit scores, they can actually get 120% LTV. So they can get more money for their building than it's worth because everybody knows they're going to repay. And then somebody who's buying a business buying a building that's falling down,
right,
and nobody's going to lend on it, but they'll put 50% cash in. You can go get a private money loan for 50% LTV. And so now we have to kind of work backwards. Like, what is the LTV that is possible, and where is the lender that's going to fall in there? Like, what tier lender is going to be there? It's A to D, and then there's some, like as the chart, as you put it in the notes, you're going to see some A minus, B minus, C plus, like that. That's your tier of the lender. And once you use that as kind of your operating manual, it's pretty easy to find the lender for your project with a simple Google search. I've made a lot of connections and deals where somebody asked me for a loan, and I said, okay, yeah, I've got 3 lenders. I'll get to working on it, and I'm gonna totally let a secret out of the bag right now. They would tell me what the deal is. I'd say, yeah, I've got 3 lenders who would love the deal. Give me some more details. They would send me the details. I would figure it out, and this is what I would do next. Google commercial real estate loan, Nebraska.
Yeah.
Hey, do you do this loan? Do you do this loan? Do you do this loan? Oh, you do? Okay, cool. So I would find the lender from a simple Google search. Nice. And then make the broker fee on it. I've done that. I don't know. I don't think it's 1,000 times. But it's more than a dozen.
I love that.
It's a lot of times. Though. Yeah. It's what a broker is they're doing the job that anybody else could do for themselves. They're no different than a contractor. They're no different than a doctor. Like, I'll give a personal example. I just had a small back surgery, and I had to use my doctor because I didn't go through medical school and surgery school, so that I can't actually operate on myself. Or else I would have, what I'm saying? Like, if it was my knee, maybe I would have taken a shot at it. So same thing with like doing the loan brokering. Like a loan broker brings no special value in that they already know where to go and already know who to talk to, or they can figure it out whilst somebody's running their business. And so when somebody's running their business, they really don't have time to make 200 phone calls to find the right lender for the right situation, for their sequence and time, for their need, whether it's equipment, working capital, business acquisition, or commercial real estate, debt refinance. They don't have time to figure it out. And whenever somebody doesn't have time to figure it out, they pay the vig and they pay the price.
Right.
Like if you want to travel to Orlando, you could just go to Orlando and buy a house. And so when you travel to Orlando, you could just go, stay in your own house in Orlando. Or you could go to a place that's already established with a bed there and they've got keys for you. It's like a hotel. Like
Hmm.
they've already done it for you, and you pay the price, for somebody else's expertise. So all we're doing is preventing our clients from going to Google and doing these Google searches themselves because they can be lost.
Right.
They don't know where to go, who to talk to. They're going to ask the wrong things. And a loan broker's job is to allow a business owner to focus on the business,
Right.
and we get paid a convenience fee. Um,
Hmm. Help them.
a loan broker is technically, I'm sorry, it's not technically, it's metaphorically the beer at the baseball game. Like it's a slightly more expensive of the same version of the same thing, but people totally pay for it all the time. Like
Right.
happy to pay for it.
I love that. That's good.
If you provide the right service at the right time, people
Mhm.
absolutely will pay for the thing. So that's that. So what else would I talk about in terms of
Well, for
it's a
prospecting, do you think your
yeah.
best use is trying to find the tier one deals? Like, is that what you should really focus on, and then
Oh,
you'll
that's a
end up
great
getting
question.
some,
That's a great question. Um,
or is it more like
are,
middle area?
yeah, are you borrowing that from the other thing I sent you, which is this one?
Maybe.
Okay. So this is the Dan's version of where the deals are. So
Oh, nice.
this is top tier deals
Hmm.
that theoretically don't need a loan broker. Like
Right.
their own bank is calling them and say, "Hey, we'd like to lend you money." And they say, "Oh, okay. Best rates, best terms." A broker is typically not going to find these terms. These are the DNF deals that they would pay 50% interest if you could just get them the deal, but nobody wants to even lend them the money at all, and not even at 50%. So a broker should be focusing in on these. So you get some of the top tier deals that can't get a loan from their own bank. You get some of the bottom tier deals that have a great property, or they've got 15 condos that they own free and clear. Like there's some other mitigating circumstance that makes them a good deal, but
Yeah.
you're constantly going to be searching for these middle grounds. And the middle ground, the definition of it is somebody who will pay a broker for the service and they won't argue about it. They will accept their place in the world. They're not gold plated. They do need help. So they have an awareness of self as a business owner, as an investor, and they're willing to take the reasonable terms that you provide for them of what's available in the market. So let's say best in the market is 7, and you say, hey, best in the market is 7, but you've got a couple things going on. I got you 7.4. Here's what the difference is. And, but they can fund within the next, 45 days. If this makes sense to you, can we go ahead and say yes? And they say, shit, it's like $300 more a month. I need to buy the building. Let's go ahead and do the deal. So they'll
Yeah.
accept your non-gold plated terms. They'll take silver plated terms, if you will, and be fine with it because they understand their life is about their business. It's not about the extra quarter point. And here's a big distinction.
Hmm.
If I'm running an automotive shop and I'm doing $100,000 a month gross income and I've got $1 million loan at $7,000 a month, the difference between 7,300 and 7,000 is maybe like the rate range.
Yeah.
$300 compared to their $100,000 gross is like teensy.
Nothing. Right.
However, if you're buying an apartment building and you need to go place $1 million in this apartment building and your rent is only $19,000 a month, and now you might have a $300 or $400 payment difference, like that is a much bigger relationship to the rent than it is in a business because it's a
Mhm.
finite amount of money that they can bring in from the rental income.
Right.
Those people care about rate and they'll shop you and leave you for a quarter point or less. I don't find that placing investment loans is that satisfying.
Mm.
Um, because I don't know that you're providing a service. You're just kind of like, are you the low rate provider or not? So
Right.
that's, like that's just my little take on it.
No, yeah, I got a guy in Texas. He's just like beating me down on interest rate prices, and it's like I'm not the bank, man. I'm trying to get you the best deal possible.
Yeah.
But
What kind of
it is
property?
what it is. It's an apartment complex, so he said it's like 45 units or something, in
Yeah.
like Houston, Texas, or somewhere. So I thought it was
Purchase or
pretty interesting.
refinance?
Purchase.
Focus on the net operating income. You're like, hey man, you're talking to me about interest rate, but I'm looking at the net operating income of like $600,000. Like,
Right.
do you want $570,000 or do you want nothing?
Right.
Because if you focus on the interest rates, you'll never win. Like there's always somebody who'll be lower,
Yeah.
ever, always. And so if you can get them off rate and into the pro forma of the net operating income or the projections of the net income, it's a much easier conversation to have. We're taught to talk about interest rate,
Hmm.
and I think it's a part of the math equation. But if they talk interest rate and then we reply in interest rate, it's the least compelling conversation we can have because it's like
Yeah,
have
it's
you
like
ever
pennies.
gone to your bank and paid them interest rate?
No. Yeah.
Nobody has.
Yeah.
We're paying money, so let's talk in money.
Right, right, right.
I don't.
I like
I
that.
try not to talk in rate. I always try and talk in money, and I want to talk about the biggest money possible, which is if you don't buy this building, you're missing out on $700,000 a year net. What are you
Right.
going to do if you don't buy it? Like I'm
Yeah.
saying, like we're talking, and I'll tell people, I know you think that the interest rate's important, but I think you're talking about the wrong thing. And they're
Yeah.
like, you know what? You're right.
I love
So many people say that. They
that.
just don't know better.
Ah, man. Well, I could pick your brain forever, man, but I truly appreciate you coming on the show. I do have questions I want to ask you. But before we do that, what's the best way for people to get in contact with you? Are you on LinkedIn, or how can
Yeah.
they have a conversation with you?
So I'm fairly active on LinkedIn in my outbound prospecting. Like I'm on LinkedIn. I've got a lot of connections, and I connect with people who are relevant to me. I'm really easy to find on LinkedIn. It's Dan Rodgers, Rogers
Mhm.
dash CRE. You can do a Google search, and I'll pop up very quickly in that. If you have questions on SBA, if you have questions on capital, if you have questions on sales, hit me up, make a connection, reference the show so that I can point it back, give him credit for it.
Mhm.
I'm fairly amicable and generous with my information. I just give it away. I'm trying not to die with all of my secrets in my head.
I love that.
Yeah.
What was one of the biggest deals you've done as a broker? Anything worth?
I did a $10 million hotel.
Wow.
So that was big. And generally speaking, brokers are making between half of a point and 2 points of the total commission. So you can understand like it's very possible to make a very good living. So for every $10 million a broker does in funded loans, they should be making $100,000.
Yeah, that's
So
amazing.
yeah. So and now
How
you
many how
do
many years in were you when you got that deal?
two or
Two.
three.
Wow.
Yeah.
Did you make anything in your first 1 and 2 years? Like
Yeah,
worth?
I actually had another job when I got into brokering. I was a
Yeah.
full-time director of sales for a company, talking to banks, and my buddy was getting upset. He's like, "I can't find a lender for this." I was like, "Oh, actually, I just had a lender. I talked to them the other day. Call up this guy." So I was brokering loans and not getting paid on it for
Yeah.
like 4 months to my
Oh
buddy.
man.
And then one day he's like, "Hey, you should be brokering loans and making money on this." I was like, "What's that?" I
Yeah.
had no idea what it was. And then, so this is a longer story, and I'm happy to come back on another podcast at the time.
Yeah.
I got fired for being too successful at that company, and I was like, "Oh shit, I need to get a job." And
Yeah.
so my job was self-employed as a loan broker because no bank would hire me because I didn't
Yeah.
have the pedigree. But I just kind of forced my way into becoming a loan broker, and I just started calling the people that I already knew in banking, like, "Hey, this is what I'm doing now, and I'd like to take the people that you can't say yes to, and I'd like to connect them with capital." And then vice versa. And right off the bat, within my first week, I had 4 or 5 deals. I was fairly successful fairly quickly,
Cool.
but I also had a lifetime of sales. And so like I
Right. So you knew how to
knew what
talk
to
to people.
say. Yeah. And
I
if
mean,
you want to have me back, if like people
yeah, I think we
shower
should.
you with questions, we can do an FAQ session or if you want to bring in audience questions, I'm happy to come back and we'll go question by question, like actual scenario. We can do some math on some things and like really truly practical things that your people can put into their own work. Um, that
I love
should
it.
result in sales conversation. Like I can't say it's going to be commissions, like that would be arrogant of me, but I
Yeah.
can say that people who use my style get into sales conversations more and bigger and faster than they would have went out without it.
Yeah. Well, we could do a whole nother one on sales. But I do just want to do the three questions that I ask pretty much everybody that comes
Oh,
on.
sure,
We
sure.
can take a little bit of
So
time. So I mean, obviously we're money guys. So the first question is like, what advice would you give to people to make more money, just do better with money, have a better relationship with money?
I think that there are people in the world who teach others how to operate emotionally with money. I've taken some classes. What your relationship with money is also very, very similar to what your parents' relationship with money is, what your
Right.
spouse's relationship with money is, whether you operate from a scarcity mindset or an abundance mindset. These are real things. So I would say go get a book or some coaching on what is it like to have money. Imagine your life, like the money's in your hand. Like, what would you do if I plop 10,000 or 100,000 or several $100,000 in there? And just kind of think about what you would do with the money. Because when people are thinking, oh, I want to be a seven-figure earner, I want to make six figures, like these are arbitrary, total BS things.
Right.
And they don't have connection with our true emotional, spiritual self. Like I'm sounding a little bit woo-woo here, but like humans, we're emotional, we're spiritual. We make emotional and spirited decisions all the time. And so when it comes to money, write it down
Yeah.
and then back into the activities that will get you there. And then back out into the, if I get this, what's going to happen?
Mhm.
Um, I know what's going to happen probably within a couple $1,000s in the next 2 months. Commission check, this happens. Commission check, that happens. Commission check, this happens. Like I know into the future what's going to happen with my money um, confidently.
Right.
So that's a big thing. Savings is fine if you have no debt. If you have debt, then I think pay off debt first. Like credit card debt is a really, really big one that mysteriously you can actually end up paying a lot more money for the money that you borrow. Like your ticket to the concert will actually forget about the Ticketmaster fees. Like if you put it on a credit card, like you're really going to pay a lot for that. I think that putting your house on a uh, bi-monthly payment is an easy one for a lot of people. Putting your car on a bi-monthly payment is an easy one where you're paying down more interest because of the billing cycle. These are little tricks. Pay an
Pay down
extra payment a
faster.
year on your house, pay an extra payment a year on your car, or two payments on. So I'm not saying have no debt. I
Mhm.
mean, Susie Orman and Dave Ramsey, they made a very, very lucrative career about telling people never to be in debt.
Right.
I sell money. Like I want you to be in debt, but it's got to be the right type of debt.
Yeah, it's gotta be an
And
asset.
yeah, and I talk about the different type of debt. We talked interest rate earlier.
Mhm.
For the people who are looking at your thing and following you, be able to talk about what is the impact of interest rate. Impact of interest rate is it expresses the relationship to the payback amount. So that's one part of the equation. The second thing, like you should be able to take a loan, 1 year loan at 30% and figure out the payment. Like go get a, I don't have it in here with me, but go get a loan calculator, not one on your phone, but like an actual loan calculator so you can do a bunch of these equations. So what is the payment of $100,000 1 year at 30%? What is $1 million or $100,000 at 10 years at 11%? What is $1 million at 25 years at 7%? So we have the payment and then just multiply the payment times the term. So we now have a total payback. You should be able to very, very accurately and intelligently talk to your customers. I know you said you wanted the lowest interest rate, but you have the cash flow to support this $100,000 loan at 30% in a year. Because if you go 30 years with this thing, this 100,000 loan will cost you 220. But if you go $100,000 loan in 1 year, it'll cost you 130. Like I think in terms of like long-term success to your business, this is maybe a better route. And where you can show people like Western society of seeing is believing. So when we see the numbers black and white, we see A, B, and C, compare and contrast. Nothing means anything until we compare and contrast things. So we can compare and contrast things. You're like, hey, this is a much higher payment. This is $10,000 a month. This is $700 a month. And let's figure out why. And you're like, oh, I want to pay. I want somebody. I want the lowest payback possible. I don't want to pay interest at all. But if I do pay interest, I want to pay the least amount of interest possible. Cool. It's $10,000 a month. Whoa. Oh, so you're actually concerned about your monthly budget. Yes. Okay. So now let's go a 30-year term or 25-year term and double up on the payments. So now we're paying it off in 15. So you have to be able to show them what is the impact of payment to term to interest rate. So,
Right.
and obviously the balance. All right. So that was question number two. I
And
think
now
I
the
did.
next question, happiness, right? First is money. Then basically, what is a tip that you found to live a happier life and just kind of be happier?
Yeah. So don't try to be happy.
Oh yeah.
It's happiness is a byproduct. I mean, it happens when you X. You don't just happy.
Right.
You work out for 6 months in a row, and your wife or your husband whistles at you, and you're like, "That was awesome."
Yeah.
That's happiness, but it came from doing the work,
Mm.
having a purpose, being important to other people, being kind to other people. Chasing happiness is an absolute waste of time because I'm happiest when I'm providing purpose to my family,
Mm.
guidance to my family, leadership to my family, friendship to my friends, profitability to my company. When I look at my own personal net worth, and like we all have the negative, zero, and positive. Like when you see your own net worth go from negative to a zero, like, oh my God, babe, we're at zero. Oh my God. Like if you haven't been at zero on your own personal net worth, shoot for zero. Try and get like that's when you see the result, the byproduct of a zero debt,
Mm-hmm.
you're like, holy shit, we just saved $1,000 this month. Like we didn't have, like we have extra money.
Right.
That's happiness.
Yeah.
When I'm dragging my son to baseball practice
Mm-hmm.
and he goes to the game and he hits a home run, that's happiness.
Right.
It is a byproduct of doing the, the damn work.
I love that. That's
And and anybody who says I just want to be happy, I want to run away from them
right.
because they're almost saying I am a ship at sea. No, they're not even a ship at sea. They are a feather in the wind.
Mm.
Like their life will be taken by other people, pushed here and there, and eventually they'll be in a spot like, oh, cool, this is kind of desirable, and it wasn't of their choosing or their actions.
Mm-hmm.
They're happy for a moment because they got the ice cream, they got the jeans, they got the car, whatever it is. Like, oh yeah, I got this car makes me. I buy the car and I'm happy, and then the car like, and then they're blown past it through other things where when my kids have the chance to go to friends' houses
Mm-hmm.
or hang out with me and their mom, they're like, "Hey, let's do a family movie night." Like that's happiness.
Right.
Like I've been working at this thing for a long time, and like I try and give away my secrets. And when you invited me to this podcast,
Mm-hmm.
that was happiness.
Right.
I didn't seek it. I tried to do my best job possible
Yeah.
to show you that I care about your customers and your clients and you as much as as I possibly could. And you're like, damn, dude, I got to have you on my podcast. I'm like,
Yeah.
that's right.
That's
That's
right. I
right.
like that. I did the work. I love
Yeah. So like when I'm
that.
doing judo on people,
yeah.
like my sales stuff, bro, I use my judo on you and look where I'm
Yeah.
at. So
Exactly.
this podcast, I was looking forward to this thing. I was like, I'm going to kill it. I'm prepared
Yeah.
and got some water so I don't dry out. So the fact that you are even open to the idea of bringing me back,
Mm-hmm.
that's happiness.
Yeah. I want to
Uh,
do one on sales for sure. I think
yeah.
that'd be fun.
And so happiness is an M and effing total BSing illusion.
I love that because everybody thinks it's the end all be all. So let's get into the last question.
Sure.
It's just impact. What's one daily habit or one daily thing that you do that you have seen genuinely have a positive impact on your life?
All right. I this in actually in 30 days exactly, I'll be married for 19 years.
Nice.
I know I look only 23, and I know like it's going to throw a lot of people off. So, so I'll be married for 19 years. Know my wife for 21 years. Um, and we heard a tip before we were engaged.
Mm.
And for all of these people out there, I know I was living in sin. I was living with my wife before we were married. Get over it. But every single night before we would actually close our eyes and be quiet and head off to sleep, I would tell my wife, hey, I really appreciate the fact that you did laundry today. I really appreciate the fact that you made that call to the dentist for me. I really appreciate the fact that when you drove my truck, that you put some gas and you got a wash. I really appreciate this.
Mm.
And my wife would turn back to me and say, you know what? I really appreciate the fact that you worked so hard. I really appreciate the fact that you took a little time and you fixed the rose bush out font. Like it was on my mind. I didn't say anything about it, but you saw it was out of a alignment, and you did a couple. You trimmed it up. It looks beautiful. Thank you so much for helping our house. So it's goddamn hard to have dreams about strangling your spouse when they just told you what they appreciate.
That's
So
awesome, though.
yeah, and it's so for 20 something years,
Yeah.
close to, yeah, 20 something years.
Gratitude and appreciation and
It's
having somebody like that.
yeah, grateful is I think grateful and appreciate are like brother, sister. They're not the same. I don't know
Yeah.
what the difference is, like actually definition wise, but appreciate, which is I appreciate you being so trusting of me, never having really met me, and then you bring me onto your podcast and expose me to your entire audience. That really took a lot of trust and a leap of faith on you. And I got to tell you, I don't think I've repaid it, but with the content I provide you here. But man, I appreciate you for that. Thank you so much. So that type of comment I also put out into my life with my underwriters. I put it
Mm.
out into my boss. If my boss answers me back in a text pretty fast, I'm like, hey, appreciate that. Really, like, thank you. Like he's helping me do my job better.
Right.
Um, and so telling people that you appreciate them, and I'm going to make a distinction. So we have grateful,
Mm.
thankful, appreciation.
Right.
When you go to the grocery store and they give you your bag, what do you say to them?
Thank you.
Yep,
Yep.
yep, yep.
I like it.
So when the Secret Service guy jumps in front of President Trump and he takes the bullet for the president,
Yeah.
what does President Trump say to that Secret Service agent?
Yeah, thanks. Thank you.
They're kind of so it's thank you is meaningless.
Right. Some deeper appreciation and pointing out exactly what it was.
If the
That's a
guy
good tip.
at Chick-fil-A says thank you for coming in today,
Right.
and the business owner that I just got a loan for $4 million says, hey, thank you for giving me that loan, they're the same
Got to go a
words.
level deeper, right?
They are different. But if my lender, my client says, you know what, Dan, you work on this for 4 months, da 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 da. You were always there, always answer questions. I text, you answer. I text, you say I don't know. You're being truthful with me, and you go find the answer, and the next day you give me the answer, or you say I'm still looking for the answer. I really appreciate you being the pilot of this bumpy SBA airplane ride. And I can't believe I have the chance to get this. Like, I just gave them a shovel or a tool or a fork where they can operate their business. And they say, I really appreciate what you did for me.
Mhm.
And appreciate is, I think the definition is going above and beyond with no expectation of getting praise,
Mm.
but doing it so the other person has an easier life.
Nice.
The rose bush, me picking up my shoes. My wife says, hey, I really appreciate you picking up your shoes. They were sitting there for a couple of days. I didn't say for you to pick them up. You just picked them up. You made my life a little bit better
Mhm.
by doing that thing that took me energy and time, and like it was so heavy to pick up the shoes. So people want to be appreciated
Right.
if they go above and beyond. If somebody's just going like the normal course of their job and you say, man, I really appreciate that. Hey, I really appreciate you making that burrito the way you made it. Like that dude makes a burrito the same way for every single person. But if I drop the burrito on the floor and it's my fault, and he's like, hey man, I got you. I'll make another one. Don't sweat it up, and I'll clean it up. You're like, hey,
I
you
appreciate
went above and beyond. You made my life better.
it.
And I really appreciate you doing that. Like that's really what appreciate means.
Yeah.
And so when we can do that for our clients, and they say it, and then they demonstrate it with sending you their friends. They demonstrate it by sending you more business. You're like, they're not lying.
Right.
They're not lying.
I think that's the pod. I appreciate you coming on here,
Oh, wow.
Dan,
Thank
for
you.
doing it.
You're
I
welcome.
appreciate it. I think it was awesome. I appreciate all the listeners as well for tuning in and sharing this with their friends and family and learning something. I think this was very, very powerful. I think we're going to have you on the show again. And yeah, I think that's it. So thank you for listening. I'll talk to you guys in the next one.